Still higher prices are due in the S&P in the days to come. Today is July 1st. Last week the S&P took off as we anticipated, and it's continuing to show some strength. The basic idea is we were looking for the 8-month cycle running up into the middle of August. On the way, there are some ups and downs and potentially some buying opportunities, but we'd only be buying at this point. The basic idea is that the market has significant resistance around 63.50, and a lot matters about what happens around that price level. If we go up to the 63.50 area, which is generated by our matrix, and our matrix lines have been very powerful in terms of stopping the market in the past, if it can break above 63.50 and retest it and then take off again, it says much higher prices are possible. Okay. If it doesn't, however, if it comes up there and stops and comes back down and plays games, and our high in August is not much higher than that, then there's a good chance we'll see the 20-year cycle continuing to repeat with a low in October that's somewhat of a pullback, and then we go up again at the end of the year. But at this point, it's possible we're in the middle of a melt-up. But one of the things we're looking at is to discriminate between whether or not we are, is how it handles the 63.50 area. Okay. Now, the 8-month cycle is also 2/3 of the Saturn-Sun synodic cycle, which is roughly 54 weeks. And 2 of those, which is roughly 108 weeks ago, has been repeating very well. And it indicates we could conceivably see significantly higher prices. But we have to see it actually happen and break through this major level. If it breaks through the 63.50 area, our matrix lines are quite a bit higher, the next major ones. So we'll have to see what happens. In the meanwhile, we're looking at, this first week of the end of June, early July, around July 4th weekend, usually the market does rally, and we're doing so this week. It's been fairly strong. The Dow is up 400 points today. It's starting to regain its momentum. It hasn't made a new high yet, but it's starting to look better. And the S&P, of course, on the futures has retested and is starting to look like it may take out the prior highs, but has not yet done so on the September contract. The cash has. Meanwhile, it's very important to recognize that the 60-year cycle, our very long-term friend, may be there. It may be the dominant cycle. The 60-year cycle has a low in October, but it's not a big decline in September. Okay. And then it goes higher. The 20-year cycle also is kind of up until August and then congeals into a low in October. So if this is a melt-up, it conceivably could last until early next year, until February or even as late as April of next year. And we'll start to see the action by what happens in the next few months, particularly with a high in mid-August. So it looks like there's a low around July 9th, and then a run-up until July 16th, another pullback until July 25th, and then a run-up into August 8th or 15th. These are just short-term pivots, nothing dramatic, but places where you can consider getting into a long position on a pullback. Okay, so we're buying pullbacks. The basis of our work is fundamentally that time is the director of traffic. Time is the Gann principle that time is more important than price. Of course, price is the most visible and the most important in terms of actually seeing what's happening, but time is the controller. When time runs out, the markets will reverse. And there are always many cycles in the market. It's a composite of a number of different harmonics all combined. And therefore, it's like water, it has the ability to move left and right, but you need to be able to add the various components together to get a good idea. Our students have been doing so in not only the S&P market, but it's been interesting to see how they've been accurately forecasting numerous markets, Bitcoin, gold, and such, crude oil. And we've been having a really fun time lately with discussing some of the cycles that are running in the market. All right, take care.